Hey guys, as of like the last few weeks, Trump and is getting gone to office, and Elon Musk is obviously a part of the Trump administration, and things like crypto, particularly the DOGE coin, because of Elon Musk's announcement of him being part of the Department of Government Efficiency, has gone crazy. Crypto in general has gone crazy. And just as in the last administration, I believe there's going to be a bull market in tech sector in general, but as well crypto, because Trump presidency is very favorable towards crypto. He's not somebody who's going to regulate it, so there's not going to be that type of paranoia about it. So long story short, we're in a new cycle of things in crypto, and I'm going to talk about my approach, what I'm going to be doing to take advantage of that, because I was in crypto a few years ago, but I got out of everything because of just my uncertainty of it, which I should have stayed in a few things in hindsight. Hindsight's 2020, but I took out all my assets when Biden got into office, right just before, and but I'm planning to re-enter, and I'm going to explain my strategy on how I'm going to do that, because some of you guys listening, some of you might be experiencing crypto and might agree or disagree with me. If you do, leave in the comment section below. But some of you watching might want to get into crypto yourself. So how to do it, okay? So first of all, you need some type of assets to work with. So hopefully you have a decent job and you're able to put aside $1,000 a month, at least, to make it worthwhile. You know, if you don't have that much, that's fine. You put aside what you can, but ideally $1,000 a month is you're going to build your portfolio over the course of time, okay? And with some of the advancements we might see in these coins, we could see you could see major percent increases. So that those few $1,000s over the course of a few months has the potential anyway to increase substantially. So it also has a potential to go down, but what we're doing is dollar cost averaging in over every 2 weeks. So even if there is a dip, you just keep continuing. Don't try to time them. We're not trying to time the market per se, although there is going to be an aspect upon which we do, which I'll mention, but you're just getting in over time, okay? So what I'm doing is, before even getting into any type of coins, because right now the Bitcoin and the Dogecoin I believe have spiked, and there's going to be a bit of a pullback, but I'm still going to dollar cost average into something. Now what am I going to get into is blockchain ETFs at first, at least for the first month or two. And because no matter what happens, I believe those are going to increase, and they're on a dip from the last few years because of since the last major bull cycle of crypto. So in 2022, roughly, there was a bear market in crypto, okay, and hasn't quite recovered since. We're starting to see the recovery right now, which a lot of people are having. There's a lot of anticipation. Like if you go to all the top guys who have been trading crypto since 2013-15, they're saying the exact same things, and that there's a bit of an anticipation, but we gotta be careful on how we're going to enter this, okay? So what I'm doing is getting into these ETFs at first, ETFs is like all across the board different things, blockchain. So it's going to be Bitcoin mining companies, it's going to be Bitcoin developers, or just blockchain developers and things like that, okay? And because if like things like Bitcoin do well, those are going to do well too. But even if Bitcoin doesn't do well, there's still potential for them to do okay. So this is kind of like the start. Second, when there is a pullback on Dogecoin and Bitcoin, start investing in that. I'm thinking when there's a 20% pullback, which they're guaranteed will, even if it goes up another 10%, when it comes down 20%, then you start dollar cost averaging into the dip. Dollar cost averaging, it's going to be every 2 weeks, putting in $500 or so, and then in a month it's going to be 1,000 into. It could be Bitcoin, it could be Dogecoin. If Dogecoin pulls back 40%, I'm going to be going into Dogecoin. If Bitcoin comes down 20%, I'm going to be going to Bitcoin. So that's that. My strategy of getting into the actual crypto in itself. And as well, the other play that I might do is Ethereum as well, because these are kind of the major, Ethereum and Bitcoin are kind of the major coins which are going to be called a store of value. Okay, you're going to store a lot of your value in these types of coins. Okay, now so I won't get into the whole how I'm going to balance the whole portfolio here, but off the bat, it's going to be about 50-50 ETFs and things like Bitcoin and Doge once there's a pullback. Okay, then I'm going to start diversifying into so there's something called Solana, which is being used right now to trade a lot of meme coins, and I believe that we're going into a meme coin cycle right now where they're going to become a lot more popular. They are, okay? This is like the next phase of crypto, is there's going to be meme coins. There's going to be new coins created, okay, in this new kind of chain. And we're seeing that there's something called Bretcoin. There's Dogecoin in itself is one of these, okay? So Dogecoin was kind of the leader in that. So first of all, investing in these particular coins in themselves, Doge is the one that I would do the majority in. So I might, but I'm not saying I wouldn't put all my eggs in the Doge basket, but it's going to be the safest bet because it's Elon Musk based, okay? So I wouldn't bet against Elon Musk. I'll put it that way, okay? And so you bet with Elon and get into Doge when there's I'm going to say a 20 to 40% pullback, start dollar cost averaging it, because right now it peaked in the last few days. It went up like 30-50% in like a day, okay? So this is the type of volatility that can make you do really well, but if you get in at the wrong time, you'll also suffer, and it'll throw you off emotionally, and that's not a good thing too. Just wait 1 second here. I'm buzzing myself in. But here's the next thing, which I kind of already touched upon, which is all these coins that are like the meme coins, they're traded primarily with something called Solana, okay? So no matter, like, if you trade in the individual meme coins, like, they could do really well or really bad, but no matter what, they're all being traded with Solana, correct? So no matter what, Solana is going to do well because that's what it's being traded with, okay? And Solana has the potential to surpass or flip, as people who are the lingo in the crypto community say, things like Ethereum. So it has the potential. Solana does to surpass the value of Ethereum. Okay, Ethereum, I think there's always going to be a place for. I think it's a good store of value, but the potential for up growth, Solana is going to be big, but there's also potential for a lot of volatility there too. So I think I covered like pretty much the basis here with all the different things that I would invest in. So I'm going to say right now, 30% blockchain ETFs. Eventually, this is like the end goal. At first, it's going to be around 50%. First, it's going to be 100%. 100% blockchain ETFs. Within the second or third months, blockchain ETFs are going to be 50-50 with something like Bitcoin, if Bitcoin goes down, okay? Then eventually, once you start, getting more cash money into your crypto game because you're investing $1,000 a month, then you can potentially, if it's Dogecoin pulls back, then you can get into whatever pulls back you get into. If it's Ethereum pulls back, maybe you get into a little Ethereum, okay? Once you get that, then Solana, and after that, potentially some meme coins in itself, okay? But at less than 10% of your portfolio, I would go even like 5%. At that time, once you've built like $5,000 to $10,000 investment into and you built that portfolio of like 30% ETFs, 30% Bitcoin, 10% Dogecoin, 10% Solana. then you can go like 5% into what the buzz is for the next meme coins, because meme coins are going to be huge, and that you could turn that 5% into like 40% very quickly if you do it right. If you get into the meme coins where there's a bit of a culture and there's a bit of a cult following in, then like the Brett coin, for example, like I'm almost tempted just to put like all my money in Brett coin, but that's high risk. Like I'd say it's a 70-30%, so 30% chance that you could lose big. That's too much, right? So by diversifying your portfolio, especially with the ETF ones, because these ETFs, like they're managed, for one, by like companies, and there's BlackRock ETFs and things like that. There's a few. There's blockchain ETFs, there's Bitcoin ETFs, and the 5 that I'm looking at, I'm going to probably invest in 2 of them. Those are going to be stable, right? They're going to make gains, and potential big gains too. It could be like 50-100% a year, okay, which is a lot. So I'm just going to end with this. If you invest $1,000 a month for 4 years, and over that 4-year time, your cumulative percent increase is 400%, which is, to be honest, realistic in Bitcoin. Like if you look at the history, I'm not saying it's going to happen, but it's realistic. You would have $500,000. You would turn, so 12 times 4 is 48. So you would turn $48,000 times 400% into $500,000. Okay, over a 4-year period, because over that time there's a cumulative percent increase. That 400 doesn't just happen at once, right? If it's 400% of 12 months, so $12,000 you invest, because $1,000 a month, so you're at $12,000. You're going to be at like something like $60,000 ish. Okay, just off the top of my head, I'm doing that math. If it goes up 400% in 1 year, again, which is possible. So then there's other things about how you take profits. I'm not even getting into that in this video, like how you just leave it all, you just leave your money in and let it ride on when there's a huge spike, or you don't want to come full circle where you make $1 million and then you go back down to $4,000, right? So it's like, how do you do that? Obviously, that's another video. I'm just talking about the entry point, and the last thing I want to mention is, that when you're doing entry, it's going to be over the course of time. You don't just get all in at once, okay? So I'll leave it there, guys. Thank you for watching. Peace.